So firstly, welcome everyone and thanks for joining today. We thought we'd run a live Q&A session focused on getting your claims and your returns right. Before I go any further, I just want to start by acknowledging the traditional owners of the land on which we meet today. As usual, I'm on Kaurna land and I pay my respects to the Kaurna people and to elders past, present and emerging. And I extend that respect to all Aboriginal and Torres Strait Islander people joining us today. As I said, today is all about supporting you to get to know your claims and your returns and getting them right, and we'll be driven essentially by what you want to know and what questions that you need answering. We've received a couple of questions ahead of today's sessions, which we'll touch on at the end of the slides. I don't have a great deal of slides to talk about, but just some key topics that we can go through, and they'll be the focus of the claims process and the difference again between the state long service leave return and the quarterly returns that you have been doing. We'll touch on working out ordinary weekly pay, and we might even talk a little bit about the recent board decision around trainees. So I'll step through these slides first, and then, which I don't think will take very long, to be honest, and then we'll have the rest of the time dedicated to answering your questions and open up the floor for that. The key thing is if something feels or seems unclear to you, it's likely that there are others that are thinking the same. So what I want today is for people not to be worried about asking questions, because I think you'll find that there are other people having the same questions, and want you to be brave, put your hand up and ask lots of questions. So that's what we're here for. Let's start with claims. So when a worker when a worker submits a claim, the first thing that the worker needs to do is select the correct claim type. And there are three options on this form. The first option is long service leave, and this is used when a worker intends to take leave from work. To access this, the worker must have accrued at least 120 months of service, and the leave must be claimed in full days with a minimum of 7 consecutive days. The important thing in this space is that payment can be a single lump sum, it can be paid weekly or paid fortnightly. And this option is about taking time off of work. Oops, my bad. The second option is a cash out claim. This is also only available once a worker has accrued 120 months of service, and the worker must claim full days and a minimum of 7 days. And this option is used when the worker wants to receive payment instead of taking leave, which we wouldn't necessarily want you to do. We'd love for you to take leave, but if your option is that you'd rather be paid out, that's what that's available for. It's really important to know that this is a payment. Now, Mandy, can you just clarify this? Is this a payment that can be made as a lump sum only, or is this a payment that can be made using different payment options?
A lump sum only for a cash out claim. So if a person just wants the money for their claim instead of taking the time off, it's just one single payment.
Brilliant. Okay, so therefore payment can only be made as a single lump sum, and it cannot be paid weekly or fortnightly. The third option for this claim form is the termination payment, and this applies when employment has ended, either by the worker or by the employer. And to access this, the worker must have accrued at least 84 months of service. By submitting this claim, the worker confirms that they do not intend to return to employment in the community services sector within the next 12 months. And payment can only be made using a single lump sum. I guess the key message here is pretty simple. The workers must select the claim type that matches their situation. What do they want? They want either long service leave to take leave, they want that cash out payment, or they're leaving the sector and they want a termination payment. So it's really important to understand that if the wrong claim type is selected, unfortunately, it just delays our process of making sure that we deliver on the timeframes that we've said we would. So it's really important to get it right as soon as possible. I just want to go into a little bit more depth around the three types of claim types, and people can take what they want from it. The first one being that long service leave claim, where a worker is taking time off work. This applies when a worker is taking leave from at least one employer. So the minimum service that the worker must have accrued is 120 months of service. So if you do the math, that's 10 years of service. The only exception in this space is if they are covered by an enterprise agreement that clearly allows leave to be taken before 10 years. The minimum claim is 7 days, which equals 1 week. So leave must be claimed in whole days only, and it does not matter how many days per week the worker is employed. To take 1 week of leave, they must claim 7 days. Now, we've got some requirements around timeframes to process this. The worker must at least provide us at least 2 months' notice before the leave starts. They also cannot take leave within the first 3 months of new employment unless the employer agrees to a shorter timeframe. If I just circle back to that 2 months of notice before the leave starts, that gives us enough time to gather all the information and process the claim. If we can do it quicker, we'll do it quicker. If we can get the information from the employer sooner and we can process it quicker, absolutely we'll do what we can in that space. But that's generally what we need to be able to process. And that's generally what we're asking all workers to do when they submit the claim. As Mandy alluded to, payment options can be made weekly, fortnightly, or as a lump sum for long service leave. And it's really important to note for those who have multiple employers that at least one employer must approve the leave. Without employer approval, the claim cannot proceed. I just also want to touch on a very important process that we're currently working through. So during the early stages, we were trying to process payments the week before the leave was due to start. Due to the wording in the regulations, it requires payment to the worker to be based on the rate of pay as per the first day of leave. So what we're doing right now is we're reviewing our process, because what we've been doing is trying to make the payment prior to the leave starting. However, the regulations have clearly state that the payment is to be made on the rate of pay on the first day of the leave being taken. So we're actually just having a bit of a review on that process at this point in time. It might mean that we need to change that process to make that payment once the leave has started. Any change, I guess, in that process that we need to make, we'll make sure that we communicate with you, with everyone as soon as possible. But at this point in time right now, we'll continue as we have been, but we're just reviewing that, and I just wanted to make you guys all aware of that change that's possibly going to occur. Just on tax, PAYG tax is deducted from the payment, and the worker will receive a PAYG summary. And there's just other considerations to take note of. Salary sacrifice is available, but only where there is an existing salary sacrifice agreement in place. The employer has approved it, and the framework for a standard long service leave claim is completed. Moving on to cash out claim. Again, this applies when a worker wants to receive the money instead of taking a holiday. The worker must have accrued at least 120 months of service, being 10 years. And the only exception is, again, if they're covered by an enterprise agreement that allows access before 10 years. The minimum amount of leave is 7 whole days. Again, it does not matter how many days per week the worker is employed. To receive payment for 1 week, they must claim 7 days. A cash out claim can be submitted at any time once the service requirement is met, and there is no notice period linked to taking leave because the worker is not stepping away from work. Again, employer approval, there must be at least one employer approve the claim, and again, without that approval, the payment cannot proceed. With the payment timing, we try to make it as close to or on the nominated date where possible. Again, as long as we've got all of the information to hand, we'll do our best to make sure that we make that payment at that time. Same rules around salary sacrifice. If there's an agreement in place, the employer has approved it, we'll make sure that that's taken care of, and we'll send that salary sacrifice portion back to the employer for normal processing through the salary sacrifice provider. And lastly, that termination claim. This requires service of at least 84 months of service. If my maths does right in my head, I think that's 7 years. Thank you, Mandy, for that nod. That's without a calculator, so I'm proud of myself. The key thing is that they also have to have left all the employment in the sector. And this is not just one employer, this is all employers within the sector. Payment is made as a lump sum only. It cannot be paid weekly or fortnightly. The worker will receive the monetary equivalent of all service recorded on their account. A termination claim can be submitted anytime after finishing work in the sector, and all employers must confirm that the worker has left employment. Until that confirmation is received, the claim cannot proceed and it cannot be processed. Just on service reset, if a worker has less than 120 months of service, their service resets to 0 once paid. So if they receive a termination payment for any service less than 120 months, their service will reset if they rejoin the sector 12 months later. If they return to the sector, they must work at least 84 months again before they can access the termination payment again. With processing timeframes in this space, we aim to process all claims within 3 weeks. And importantly, those 3 weeks start pretty much once we have all the complete information. We do our best to make sure that payments are made as soon as possible after leaving work for termination or contractor claims. And simply, that's pretty much how termination claims are managed. Anything you want to add before we move on to state long service leave return, Mandy?
Not at this
Excellent.
stage.
Good, means I haven't missed anything, which is great, thank you. So we just wanted to move on to the next stage, and if you have any questions around the claims type, absolutely we'll get to them, so don't feel like we're going to miss out on that space. Just to talk you through the state long service leave one-off return, which is different to your quarterly returns, and I'll just step through what you need to do to complete it. This return is how we collect information about your workers' service in the community service sector before the portable scheme started. It captures the long service leave accrued before the 1st of October 2025, essentially, and it's really important that we do that to ensure that your workers' balances are correct on their worker portal, and those workers understand how much leave they have available. When it comes to pre-scheme service, the scheme recognises time worked in the sector before the start date, which was the 1st of October. As an employer, we're asking you to provide a summary of each worker's service as at the 30th of September 2025, and that is the purpose of the state long service leave return. The service will then be credited to the worker's record under the scheme. And it's really important not to confuse the state long service leave return with the quarterly return. They are very different. The state long service leave return is a one-off return. as I said, it captures pre-1 October accruals and it records existing entitlements under the scheme. Whereas the quarterly returns reports weeks worked and ordinary weekly pay. It covers a specific reporting period. It confirms the levy payable, which is 2.2% of OWP. The quarterly returns are ongoing and they are submitted each quarter. And the state long service leave return must be submitted through the employer portal by the 4th of March. So there are two different returns. The quarterly return, which is going to be a regular occurrence for your workplace, whereas this state long service leave return is a once-off return to capture pre-scheme service. If you can see the screen now, it's just a bit of a screenshot of the state long service leave form on the dashboard. And what we're asking is for all workers, we need to have a start date, and the service end date would generally be the 30th of September 2025, and how many months they've accrued. So when it comes to worker service, we need to record continuous service in months from the start date to the date the worker was registered with the portable scheme. And again, I feel like I'm repeating myself, but again, that is generally the 30th of September 2025. Long service leave accrued is simply you need to calculate the weeks of long service leave accrued under the Long Service Leave Act before registration with the portable scheme. An accrual is capped at 1.3 weeks per completed year of service. When it comes to long service leave already taken, this is where you need to record any long service leave that has been taken by the worker before the registration with the portable scheme. And then the long service leave remaining is the accrued amount minus the already taken amount, and they'll give you your balance. When it comes to employer liability, what we are asking people to do is to list a financial liability for any service that is 7 years or more that's accrued by the worker. What we would say to you is, if you calculate what would have been payable to the worker on the day before their registration, and in most cases that's the 30th of September, what that calculation would have been, and that is your liability. For any workers that haven't reached the 7-year milestone there as yet, you don't need to enter a liability into the state long service leave return. You just have to enter 0 for the time being, because the long service leave will be calculated at the time of leave once they receive that, or once they reach that 7 years. So a practical step when it comes to calculating accruals. So the first one would be you'd calculate the average weekly hours, and you'd look at the relevant period, often the last 3 years. For example, if they worked in their 8th year, they worked 10 years per week. If they worked in their 9th year at 20 hours per week, and in their 10th year, they worked at 30 hours per week. The average over those 3 years at the end of year 10 is essentially 10 plus 20 plus 30, which gives you 60, and then you divide it by 3, which gives you an average of 20 hours per week over the last 3 years. The next step would be to work out the weeks of leave. Under the Long Service Leave Act of 1987, workers accrue 1.3 weeks per full year, of service. An example of that is if someone has 10 years of service and they get 1.3 weeks per full year, they have 13 weeks of leave. So that's 10 times 1.3 weeks. It gives you 13 weeks of leave. Importantly, if your payroll system works in hours, what you'd need to do, you'd need to multiply weeks of leave by the average weekly hours at the relevant point. So for example, if the worker has 13 weeks of leave and they average 20 hours per week, it would be 13 times 20. And again, without my calculator, my head tells me that's 260 hours. If the average hours increase later, the hours value increases, even though the number of weeks stays the same. Things to keep in mind is keep looking at the relevant averaging period. The hourly values may change if average hours change. I know payroll systems may round up differently or round down differently, so just keep an eye on that. I guess treat this as a practical, method, not a strict formula. So the practical side of things is provided in this presentation, but the formula that you might work on might be slightly different. So just use the practical method. Just a quick reference for everyone out there that isn't familiar. 7 years of service will equal 9.1 weeks of service accrued, 8 years of service, 10.4, and so on. When you get to 10 years, it's 13 weeks. One thing that we would recommend you do when you're filling out the state long service leave return is there is a comment section on the form, which is a free form section. We would recommend you use this section as much as you can or as much as you need to. You can provide additional information of clarification. It might be things like the weekly rate of pay. It might change, so you might just want to add some information in there about that. What that does, I guess, is reduces the need for our team to follow up with you and question some of the things that has been entered and submitted. The comment section has been left free for exactly that reason, for you to provide that additional information or that clarity or anything that you can provide us to help make the processing side of things more simpler and quicker. I know you would all know that we have also published a range of information sheets, and we do have a step-by-step state long service leave return guide on our website. And one thing I'd probably leave with you on this conversation or this topic is, if you're unsure about the calculations, raise it early. It's much easier to fix anything before submission rather than after. So just if we move on to the other return, which is the quarterly periodic return, this is the return you'll submit every quarter. And for each eligible worker, you must declare how many weeks that worker has worked and how much you've paid them for that reporting period. When it comes to remuneration, remuneration is the gross amount paid to the worker in that quarter. This is not net pay, it's the total gross amount before tax. When it comes to weeks worked, it means the number of weeks the remuneration relates to. So if a worker did not receive any pay for a week, that week must not be counted. It only includes weeks where payment was made. And this is important because weeks worked links directly to how entitlements are calculated. If your worker hasn't worked at all during that quarterly period, absolutely enter 0. If your worker has worked some weeks but not all weeks, we'll need to understand which weeks that they've worked and the information required to confirm how much they were paid to make sure that we get our calculations right. So that type of information that we might need in that case where workers have worked only some weeks and not all weeks, we need things like timesheets. So we can identify which weeks they actually worked, and we use that information to confirm workers are paid at the correct rate when they later claim long service leave. So that's really important to note. So that's why we need that additional information to be able to make sure that we get the calculations right from our end. Again, if we don't get that information If we don't get timesheets for whatever reason and they're not provided, it does actually delay the processing of the claim at the time that the worker does make a claim, and that does just require us to do some follow-up. So what we're trying to do is make this process as streamlined and as easy as possible for everyone. So we're just trying to encourage everyone to make sure that whatever's being requested is being provided, to make sure that we can adhere to the timeframes that we have promised. Just to reiterate, when it comes to some of the due dates, so employer, these quarterly periodic returns and the levy payments as due on the 21st day after each quarter is completed. So we are currently in the January to March quarter, and the due date for the return to be submitted for that one is the 21st of April, and so on. And I said earlier, these returns are ongoing and they must be submitted each quarter, and meeting the due dates for each quarterly return avoids penalties and keeps worker records accurate. Moving on to ordinary weekly pay, or OWP as some people call it. OWP is the amount used to calculate what a worker is paid when they take long service leave. The calculation depends on when the service was accrued. For service after the 1st of October 2025, so once the portal scheme has started, OWP is calculated as the average of what the worker has earned each week over the past 3 years across all employers in the scheme. So we look at total earnings across the sector, average that over 3 years, and that becomes a weekly rate used to pay leave. For service before the 1st of October 2025, so under the State Act, a different calculation applies, and this is called Ordinary Weekly Rate of Pay, or OWRP. This is calculated as current hourly rate times average weekly hours over the previous 3 years. And this is calculated by the employer in line with that Long Service Leave Act of 1987. So in short, post 1st of October 2025, service uses a 3-year earnings average across employers, and pre-1 October 2025 service uses the Act-based hourly rate method calculated by the employer. So understanding the difference matters. It really does matter, because both calculations may apply to the same worker and depending on when their service was accrued. I know I'm going through a lot at the moment, and I know we'll get to your questions, and I assume Mandy's been busily answering and responding to some of your chat questions. So thank you for doing that, and thanks for hearing us out. We're nearly at the end of our, I guess, educational slides, and then we'll get to your questions. I just want to touch base quickly on trainees. Just recently, our board approved an important change to the portable long service leave scheme for trainees. Trainees are now included in the definition of an apprentice and are therefore exempt from levy payments. This change recognises the vital roles that trainees play in building skills across the sector, and it reduces costs for employers who support them. So what does it mean in practice? Simply, it means that both apprentices and trainees are now exempt from levy, and you don't need to pay a levy payment for those workers. If you had included any trainees in your first quarterly return and you paid a levy for those workers, we can sort that out for you. Firstly, and really importantly, you'll need to provide a copy of the recognised training contract for our team to review. And once we've confirmed eligibility, we'll adjust the quarterly return and apply a credit to your employer account. That credit can either be deducted from your next quarterly return or refunded to you, whichever you prefer. If you do want a refund, there is a form on your employer portal under forms, and you'd simply submit a request through that portal using the refund request form. Just a quick couple of things to go through around other key bits of information. PAYG, tax is deducted from long service leave payments based on the ATO weekly tax tables. And this is standard PAYG withholding. Salary sacrifice, you can choose to direct part of or all of your leave payment to your employer for salary sacrifice. Like I said earlier, 2 conditions apply. You must have an existing salary sacrifice agreement and your employer must approve it. And finally, a PAYG summary will be available at the end of the financial year, I understand. This shows the total tax deducted and the payments made for your records and tax purposes. That pretty much comes to the end of what I really wanted to share with you all around some of those things. It's really now up to you as to answering any questions, and we can use Mandy's knowledge to answer them. I know we did receive a couple of questions ahead of today's session, which I think Mandy might just provide a response to now. But if there's any questions in the meantime, be brave, put your camera on, ask us a question, or put your hand up, or chuck it through the chat and we can go from there. Over to you, Mandy.
Thanks, Aaron. So the 2 questions that we got before the session was for the employees who have not reached 7 years as at 30 September, do we need to maintain any accrued leave hours or dollars in our records, or is their long service leave liability entirely the responsibility of portable long service leave? And the answer to that question is you do have a liability for those workers if they reach that 7-year mark. So if they had 5 years before the scheme started and they stay with you for 2 more years, then you do hold that liability for the 5 years. You can't calculate that as a dollar figure because it's calculated on payment to the worker. So when the worker makes a claim, the rate of pay that they're paid is used to calculate what the dollar value of that liability is. But you do still hold that until it has been claimed. The other question was if the employee resigned and is terminating in March, can we pay out their long service leave? The answer to that question is it's better if you don't. If the worker is staying in the sector, then maybe they want to continue to build on the long service leave that they have. If the worker is leaving the sector, then they'll have some portable long service leave entitlements that they might want to claim, which is quite a lot easier if you do the whole lot at once. But under the provisions in the legislation for extinguishing liability, if you want to pay the worker directly for the liability that you're holding for their long service leave accrued up to 30th of September, then you and the worker can make that agreement. You'll need to fill in the extinguished liability form that is on our website if you do make that choice. Super important that employers do not pay out workers for long service leave accrued under the Portable Long Service Leave Act after 1st of October. We aren't going to reimburse you. That does need to be claimed through Portable Long Service Leave. There's a question here. Thanks, Donna. A question here about changing the primary contact in the portal. Ordinarily, only the primary contact can reassign the primary contact, but if the primary contact has left your organisation, please send us an email from one of the other registered contact addresses or through the messaging and advise who you'd like the primary contact to be instead, and we'll be able to update that for you. Next question, if an employee has taken long service leave and is being paid by the scheme, do you report that in the total remuneration in the quarterly return? No, you don't, because we paid the worker, you didn't pay the worker, so you don't need to include that in the remuneration. And that's all the questions I've got so far. Does anyone want to put their hand up and ask one?
I guess this is exactly what today's session is all about, to make sure that everyone has an opportunity to ask the questions that they might have a bit of confusion about. we run these sessions to make sure that you have that opportunity. So feel free, jump on.
Yeah, I guess one of the reasons why we decided to hold this session today is that our claims processing is taking a little while to do. And a lot of that is because most of the forms have errors on them. Sometimes it's because people are not sure about how to apply or what they're applying for. Sometimes it's because the service that's been recorded on the second page of the form by the employer isn't quite right, or the rate of pay isn't quite right. And so we do need to follow up on all of those things before we're able to make the payments to the workers. We don't want to delay these payments for you. We want to be able to pay them as soon as possible, make it as easy and quickly as possible. But we do need all that information to be correct before we're able to do so. One of the super difficult issues has been about the days of leave that's being claimed. The days of leave are based on calendar days, not the days worked. So if a person wants to take 2 weeks of leave, then they need to apply for 14 days of leave, regardless of how many days a week they work. And that's one of the huge holdups, is that the days that are on the forms is not the same as the dates that they've put on the forms. There's a question that says, when an employee takes long service leave and is paid by the scheme, will you advise us of how much in total you're paying the employee, not just our required contribution? The answer to that question is no, because long service leave that's paid under the Portable Act is based on the worker's rate of pay across the entire sector and can include their rates of pay across multiple employers. So for a bunch of reasons, mostly privacy, we can't provide you with that detail of exactly what that payment amount is. You'll only know obviously what your contribution is if it is there, and if any salary sacrifice is being paid to you, then you'll know how much that is. Anyone have any more questions?
I guess we'll make sure that this is the recording of this session is also put up on our website. Can't guarantee it will be today, but as soon as possible, but it will be available for anyone to share with colleagues or friends or anyone who was unable to attend today as well.
State return. So there's a question there, but I was just going to talk about that as well. So on the state return, for workers who haven't reached an entitlement yet, we do need you to provide the months accrued for them, because those months of service becomes part of their time in the sector, and time in the sector is how we work out how much leave they're entitled to. So it's super important, even if they've only been with you for 6 months or 2 years or whatever, we still need those months accrued to be reported on the return form, the state return. For the employees who haven't reached 7 years, and so you didn't hold a liability for them at 30 September, you don't need to put the dollar value on because you can't calculate that yet. The calculations for the employer liability is only for workers who had an entitlement, so that's 7 years, at 30 September, and then you put that dollar value in. If someone's taken long service leave that's paid by portable long service leave, in the quarterly return, do we exclude the leave taken period from the weeks worked? Yes. So when you're doing the weeks worked on your quarterly return, that's just based on what you've paid the worker for. So how many weeks did you pay the worker for during that period? Or how many weeks did they receive pay during that period? So if they were on portable long service leave and they didn't work for you during that time, then you wouldn't include those weeks in the weeks worked. Michelle?
Just to I was about to do the same thing. Jumped in.
So
just to confirm, so yes, so prior to the 1st of October, people that haven't reached the 7 years, like you said before, if someone's reached 5 years and they stay in the industry with us for another 2, which gives them the pro rata, what happens with the liability from there? Like, do we have to pay you the liability for the last 5 years, or how does that work?
Yeah, so you will hold a liability for the service accrued in the 5 years, but the actual dollar amount of that can't be calculated until the worker makes a claim or on their termination. So, for example, if they reach 10 years and you hold 5 years of liability, so 5 years from now, they've reached their 10 years and then they make a claim, you'll need to pay for the service that is accrued in that first 5 years based on their rate of pay at the time that they make the claim.
Okay.
If the person happens to terminate before they make a claim, so maybe they stay with you for another 2 years and then work somewhere else for 3 years and then they decide to take their long service leave, the rate of pay that will calculate your liability on is on their last day of work with you. So obviously you can't pay them at what some other employer is paying them. So you would pay them what their rate of pay was on their last day of work in that role with you.
Okay. Thank you.
Thanks, Michelle.
Nice.
Tim?
How, if an employer does leave, how do we know when we no longer have that liability? Because we wouldn't necessarily know if they're still in the sector, because we have to actually accrue that liability for our accounting purposes. So when do we know that that is no longer a liability for us?
So if you hold a liability for the worker, so if they've reached 7 years before they've terminated with you, you hold that liability until you've paid it. So that's how you'll know, is that the person will make a claim. And when they make a claim, we'll ask you for the money to reimburse. And then once you've extinguished that liability, because we've paid the worker for all of that long service leave you're holding, that's when it's gone.
Say they only work for us for, say, 4 years. Okay.
Yep.
They go on to another employer and then another one. How do we know if they've left the sector?
Well, if they only worked for you for 4 years, then you don't hold a liability for them because they didn't stay with you for 7 years. So you'll know on termination that you don't hold a liability because they didn't stay with you for 7 years.
But you will still bill us if they reach the 7 years at some stage and claim their liability?
No, we won't.
No?
Because if they don't stay with you for 7 years, then any service accrued before the 1st of October gets cancelled. They only get to keep that service before 1st October if they reach an entitlement under the State Act, and you'll know if that happens.
Okay, thank you.
No problem.
Okay, Trevor? Trevor?
Oh, you're on mute, Trevor.
All right, I'm not sure if Trevor's...
There we go.
Oh, here we go.
Okay,
Gotcha.
so someone's entered the sector in 2020, right?
Mm-hmm.
They work for an organisation for 5 years, so that's 2025, right? They then work for another place for 7 months, another place for 8 months. So what you're telling me is that potentially is a 7-year let's round up a 7-year liability to the current employer. Is that what you're saying?
Nope, because that first 5 years, if they started in 2020, that first 5 years isn't going to be part of the scheme because they didn't reach an entitlement with that particular employer and it was before the scheme started.
Oh, okay. So you've got to reach an entitlement with a current employer for it to apply.
That's correct.
Spot on, Trevor.
Because thank goodness for that, because you know what, an organisation would be up for 7 years and they've only been with you for 12 months, right? So
that'd be crazy difficult.
Yeah. So I'm glad to clarify that. Thank you.
Thanks, Trevor. Appreciate that.
No problem.
All right, I think we got a question in the chat. Rachel's working through a termination claim and there's a discrepancy. It looks like the original state return was completed incorrectly, which is leading to the discrepancy. Is there a way of amending this?
There's not a way of amending it in the portal, but if there are issues with the state return, please send us an email telling us what you need to adjust and ideally why, because then we won't ask you more questions. But yeah, if you've just calculated the liability wrong or the weekly rate of pay wrong or something like that, then yeah, send us an email and let us know. We'll be able to make the adjustments on our end.
Excellent. Okay, hopefully that answers your question there, Rachel. Lillian has asked a question about the average weekly earnings. If they are paid at an average weekly earnings, how do we know if we have exhausted our liability?
So what happens when we pay the worker and we're using the liability that the employer holds is that we will send you an email saying, okay, we're just about to send you an invoice for X amount. After that, your liability will be reduced to whatever the liability is, so that you'll be able to have that visibility every time we request a payment from you of what your balance is being reduced to. Once you've used up all of that balance, that little table that's in the email will say that you have no further liability, and any additional payments will come from portable long service leave. We won't be invoicing you again.
And I know we've got Veronica and Donna there talking about different types of payroll systems, and I think we have discussed this in the past when so many organisations use so many different types of payroll systems. It's really difficult for us to know what kind of processes that you have to go through to enter the data. So we have spoken to some payroll system providers, and they are looking at ways to make the processing side of things from their perspective easier. I know a lot of employers have been talking to organisations to do that. I don't know much about Elmo, unfortunately, Donna, but I would assume that if there's multiple employers that are having the same questions going back to the same provider, there might be some prompts there for that provider to help their customers. I would hope, anyways, but there's not much from our perspective. I don't think we can do. Mandy, is that anything more to add to that?
Yeah, not heaps we can do about that because everyone's payroll systems are different. I actually spoke to someone last week who said that they've set up a automatic report that comes out of their system. So it takes them 10 minutes to do it for their 150 workers. I know that's not necessarily possible for everyone, but just for a bit of positivity, there are solutions out there. I don't know exactly how they work, but hopefully it will get easier the more we go along with it.
And as Donna's just mentioned, she said that Elmo's looking into this. So I guess that, again, if there's numerous organisations that are asking the same question of the same provider, actually probably helps with that provider making those changes or that help.
Lisa, there is a page on our website about employer liability. So it's under transitional arrangements. If you go to our website and go to employers and then click on transitional arrangements, it does talk about that a bit, about when you hold an entitlement for the worker and when you don't hold an entitlement for the worker.
Excellent. Thanks, Mandy. And that's just a really good point I'll make to everyone listening. Our website is full of resources and information, and we're updating it fairly regularly. So I would recommend people looking at the website as the first port of call. Go there, see what you can find, use the search function. There's plenty of information on it. The other thing I'd like to just mention is that in the forms download section where you might download a termination form or the claims form, we update those forms fairly regularly, whether or not they're fixing something or we're updating something. So what I would suggest is every time you need to use that form is you download it from the website, because if you downloaded it 3 weeks ago and use it, it actually might not be the latest version of the form. So my big recommendation would be to go to the website every time you need that form and download it every time you need it, instead of relying on the form that you used 3 weeks ago.
We did just upload a new version of the extinguished liability form yesterday as well. So if you do have that one, that's exactly the example of where you should go grab it from the website again if you need it now.
Yeah, just an important thing to remember, I guess, is like a lot of our information sheets as well, we update them regularly and they're dated, so you'll know when they've been updated. But yeah, every time you need to use a form, I would recommend you going to grab it from the website instead of relying on an old version. Anyone got their hands up? No. Okay. Donna, we hear you about Elmo.
And the forms as well, we're sure they do feel repetitive. We just need to grab the data so we can make the payments, and that's why we ask for it. If we don't need it, we're not going to ask you.
Yeah, so I appreciate your understanding and your patience with that. What are we, 11:20? So we don't necessarily have a time limit, but if we don't have any questions, we can close it off. I know that you all sometimes might get things pop in your head after the fact. So if you do want to get some information about something that you didn't think of right now, have a look on our website for that information first and foremost. And if you can't find anything, we do have our team ready and available either on email or on the phone that they can answer your questions.
I'm not sure if Aaron touched on it earlier, But one of the new things that we have been implementing so that we can streamline processes a bit is that we can't provide updates on claims within that 3-week processing time. So if a worker's applied for a leave or a payment or whatever, that's the 3-week processing time. Ideally, we get everything processed within that time and they'll receive email confirmation and everything and their payment within that 3-week time frame. But rather than having people calling us every day to find out where their claim is at, there won't be any answers or updates until after that 3-week time frame, unless we've processed your payment. And then obviously you'll get the update saying we've processed your payment. So if you can encourage workers not to call us every day and find out where it's up to until that 3-week period is ended, that would be great.
And I think we have captured all of or most of the questions that we received pre today's session, but if we haven't, please let me know right now or send us a message. I just want to make sure that we have captured all of your questions and we've responded to them as we've promised. So it doesn't seem like anyone else is needing any more support, Mandy. Oh, hang on.
Oh no, that's okay. I answered that one. It's fine.
Oh, you worried me for a minute then. All right. Well, look.
Sorry, Aaron.
Yeah. If no one has any more questions, we might call it a day then and give you some time back in your busy calendars. Just to remind you, jump on our website, follow us on our socials. We're on LinkedIn and we're on Facebook. We post regularly on both of those platforms around updates or bits of information, or we promote sessions like today on those 2 platforms as well. So if you want to jump on our mailing list, please let us know. You can jump on the contact us page on our website and register for our mailing list. We send out newsletter information. I think we only just sent out a newsletter earlier this week, I think Monday maybe. I think newsletter number 5 went out to everyone on our mailing list on Monday. But if you aren't on our mailing list and you want to keep informed, let us know. But we'll leave it at that. Thank you very much for everyone's participation today and their questions. If we haven't answered, please come back to us and let us know. But appreciate all your time and your efforts, and we'll leave it at that. Thank you very much, everyone. Have a great rest of the Friday.